We are live.
Hey, Mark, Charles, how you guys doing?
Hey Yusuf, good to see you. I'm doing great. I'm doing great. How was your weekend? I think it was pretty busy, I'm guessing.
It was quite eventful, to say the least.
Yeah. Yeah, I'm sure, man. I saw the market was pinging around quite a bit over the weekend, which it's been pretty volatile, I guess. Maybe this weekend, maybe just a tad bit more volatile.
Mm. Yeah, it was a tad bit more volatile, and it was a tad bit more indecisive. So over the weekend, I originally started off playing Bitcoin short. It gave me some signals that we was breaking up towards the upside. So it kind of had me going back and forth a little bit before it finally came down a little bit this morning. But it was very interesting, to say the least.
Yeah, yeah. Now I know it's even more interesting for you because you're one of the probably fewer traders out there that are playing the upside and the downside,
Mm-hmm.
right? So probably, I mean, there's any number of ways or strategies to trade the market, and not everybody does up and down, right? So to do up and down is even more work.
Oh, absolutely. I mean, you always have to have a plot and idea. Like my plot and idea was Bitcoin hitting certain levels, but you have to have, what if scenarios, plan Bs, plan Cs. So even as I was going short, I had a bullish idea ready if Bitcoin hit certain price levels, which it did. So I deployed that bullish idea. So if this happened, that means this may be in play.
Right.
So it was really interesting. And then it came back. So then I went back to my bearish scenario. So it was very eventful. I probably should have just avoided the weekend entirely. That would have been the best thing. But I thought I could steal something, steal a few pips out the weekend, and it just didn't work out like that. So that's the way it goes.
So
Yeah,
if you're okay, Yusuf, I think, I had a blast just, well, I guess this weekend I decided to hop in on one of your trades. So it was more than just eating popcorn. But can we actually, would you be cool, sharing the screen and, maybe going through our Facebook Messenger stuff? Just,
No. Yeah, do it. That's going to be fun.
Okay. Well, why don't you pull it up? Because you can probably talk about it better than me scrolling through it and everything.
Hold on 1 second. Let me pull it up.
I think it was a hoot.
Oh, man.
And I think it's good so people realize, all the stuff that goes into it, And, I mean, when Yusuf gets emotional, something's going on. So why don't we take a second?
Yeah, in 1 second here. All righty. Let me share this screen. All right, so you guys can see my inbox right now, right?
Yep.
Oh man, so where does this even start?
I think we started. It was Saturday because we started talking because I was coming back from Florida and that's when I shorted the 2 Bitcoins. So probably Saturday afternoon.
Yeah, so we're somewhere around here. So let's start here. Here's a good spot. So we're somewhere around here. This is where I said let me go up a little bit more. So this is where you was saying, Charles, where you was going to short Bitcoin, where you was going to, liquidate some Bitcoin and buy it down at the bottom. So let's say here. So I got in Bitcoin right around here at 69.40 when we broke out of this little wedge, and we ran down. And then he asked me to go 6,100 by Monday. I was like, sure, basically. Yeah, that's what's happening. So we broke out the wedge, was running some profit, and then this is why I reiterated, the goal was 6,100 as a target. And I mentioned the 6K levels holding really strong, so I was going to pay attention to that level, when Monday, Tuesday came. So then...
And before I think part of the fun, can you actually look at that chart and kind of explain your reason? I know if you click on it, it'll actually enlarge.
Yeah, sure. So here's the chart right here. And
Yeah, so you're looking at this, and why don't you like talk about what's going on here?
So this is like a 5-minute chart. I don't trade on a 5-minute chart, but I was showing the 5-minute chart just as a micro view of what's happening. So in this chart, this was the wedge, and I was expecting price to break down. But before that before it actually broke down, it actually popped up towards the upside. And that would have gave us basically a false breakout. So when you see this in red, all this price right here, that gives traders an indication that, hey, maybe we're not going lower, we're actually going higher. So this one I actually avoided altogether. I said, I know this is a false breakout, so I'm staying out the market. So but I'm going to tell you where it did catch me. We're going to get to that. So we was in the shorts. You got into your short. Everybody's kumbaya. You know, it was getting the money to the bank. It was looking beautiful because I was already on a roll. I was like, man, this is going to be just an excellent icing to the weekend. So we're conversating. We're jovial. Everybody's happy. Then price turns back around. And in this chart, as I demonstrated, we retested this area. So this black line was resistance. And I said, okay, we retested. Even though I expected price to go down, pull back up, and come back down, instead it pulled back up, came down a little bit, and then pulled back up. I said, no, but that's still acceptable in terms of trading. That's still acceptable. So we can still short from here. And I actually entered another short position. I was like, yeah, I'm just going to short it. Not a big deal. So that didn't work out. I end up losing.
You got out, though, first, right? You got in, you got out, and you were looking to get back in.
Exactly. So I was looking to get back in. Yeah, so yeah. And for everybody's listening, getting in and getting out like that, most of the times, if not all of the times, you're going to lose some money or if you're lucky, break even. In my circumstance, I actually lost like 50 or 100 pips. So I was losing money. Let's be clear on this. So after we got that break, I explained that to you in this paragraph right here. I said, okay, well, here's the new possible scenarios. Because we broke that resistance line, we broke the 50 Fibonacci level, we were testing the 0.618 Fibonacci level. It's possible that we're forming a harmonic pattern on the bull side. And that could take us all the way up to 7,500, even as high as 8,200, where there's confluence there. So now I'm thinking bullish. However, so I got into a buy here. So this is where things just went crazy. So I got into a buy, and my buy was at 7,000, and I explained it over here. And then we went up a little bit, and then price came back down to like 7,007. And I closed. I was like, man, I'm getting out of this. Like, I just don't like the way price is painting in the market. But where I should have just said, that's enough. I had enough for one day. You know the guy at the bar that had too much to drink? Like, I was that guy. So I had, instead of just walking away, so you know what? I'm not, and as a trader, it's okay if you don't know what's happening in that particular instance. You don't have to know everything. I know, some traders, they may detest that or resent that, but we're not, fortune seekers. If things are happening you're not comfortable or familiar with, just step out the market until things are more confluent for you. But I went back to my gut feeling. I said, you know what? Now I think I could short this thing. So I got back in again at 69.95 on the short. It wasn't enough for me. So I got back in on the short. Instead of it shorting, like this is where around this area is where I got back in. So instead of it falling down back towards the trend line, price actually went back up. And I actually gave the market another 100 pips. So I think over the weekend, I gave the market like 250, 260 pips. So I was very generous this weekend. Everybody got some love for me this weekend. Like Christmas gifts, all that stuff was taken care of this weekend. So
I guess the question I have, so honestly, I put the position in, and I still believed in your analysis. I guess I was just I guess it'd be a little more risky, right? Because I basically have my short it was 6,900, and I haven't covered it because I still, I looked at the stuff and, I looked at what you did and everything like that. And I was like, well, I'm not going to look at it like a day-by-day trade. I'll look at it as, let's see what happens if it drops to 62 or 61 before that rebound, So help me understand, right? Because I I took your position, but I took a longer position on it. Well, there's two things. First, I'm not looking at it like you, so I'm not like as intent. You know what I mean? But like you got in and out, in and out, in and out multiple times.
Right. So like in your case, whenever you're swing trading, and if you want to consider that a swing, what you just experienced, Charles, you're going to catch more pips, generally speaking, and it's going to be a less dramatic experience. See, for me as a day trader, as a swing trader, entry prices are really, really important. So, say for instance, you might sell Bitcoin at 6,900, and but for me to get Bitcoin at 6,995, like that's a really big deal to me because I'm using leverage. So if I'm doing 5 times, 10 times, 20 times the movement, all of those little dollars where you're like, man, just $1 here, $1 there, I'll let it ride out. For me, it's like $100, $1,000. So it's really important that I have very good entry prices. So it's a lot more dramatic, a lot more suspenseful for me. But what you did was excellent. I mean, it's working out for you, perfectly. For me, because I know I'm using leverage and because certain things in the market weren't painting the way that I wanted to paint, I had to get in, I had to get out because those things can run away from you. And any trader will let you know, cut your losses early. If I say, you know what, I'm letting this thing ride out, and I woke up this morning, the market was at $7,500. That's several. That's several $1,000s I could have restricted if I would have just got out. So trading is not just about making money; it's also about limiting losses. It works on both ends. So
and I'll be fair. I mean, basically, my butt got saved. Up till 5 o'clock this morning, right? Bitcoin was sitting at $7,100, right, and then it tanked, 4% or whatever this morning, and now I'm back in the green again at 67.
Nice.
So,
nice. I'm glad you listened to the first me. The other me's, I don't know about those guys. But so I got back in. I end up getting kicked out of it, and then earlier this morning I seen the spike down, and that's when I got back in with this chart right here. When we broke that.
And can we talk about your analysis? You said it was at like the 0.5 Fibonacci level or the 0.87. I mean. Yeah,
sure. So basically, with Fibonacci's, there's a little indicator that we use. So basically, whenever price crosses over the 0.236 fib, that's normally indication that price is going up. And you guys can see that in the chart right here. When we cross this 0.236 fib, price went up. And price likes to test the 0.318 fib a lot, the 0.5 fib a lot, the 618 fib. Those are very common fibs. Where those Fibonacci levels rest based on support and resistance can be very telling. So if we're breaking resistance in order to get to the 0.618 fib, there's a very good probability we might pull back down to like the 0.5 fib and then work our way back up. So when we went all the way up to this 0.618 fib, we broke that. I mean, it was a bullish signal. Like, okay, there's a very good chance that we may see much higher prices at 7,300, at 7,500. Like those start becoming targets. When in reality, it was really just slippage. Like price really should not have been here. And whenever you see a hard rejection from price like this, that lets you know like price was never even supposed to be there. I mean, technically, it wasn't even supposed to be there. So that's why we see.
When you say that, you say like those two big green candles previously, like let it rise pretty quickly right there.
Say that again.
And it never should have gotten there. And really, it's those two long green candles to the left that really brought it up to that level.
Right, exactly. So like these candles are fine. Like going all the way up to 7,000 was perfectly fine. I mean, where my plot was 7,000 reject, because last time we seen $7,000, there was some pretty strong rejection. So 7,000 was fine for me. It was only when we started breaking 7,000 when things started to become a little bit dicey. And with this rejection, this tells me the market is also agreeing, saying, hey, we shouldn't be at 7,100. Like we should be much lower. Let's hurry up and get there. So, with that price action, we were able to get back into our shorts, recover from the losses of those trades, and we're actually in a net profit if we're just looking at today and yesterday. But it could have been avoided. And sometimes you have to know when to stay out of the market. So I've done really well on weekends with Bitcoin, and this weekend it wasn't all that great. I'm not that proud of myself.
On those,
here's something.
On those big green candles that you see, those two big ones that really drive the price up there. I mean, those are obviously big jumps, right? You think that's a lot of shorts that got liquidated there?
It's really hard for me to call it on the if you're looking at like the fundamental side as far as what's happening behind the scenes. What I can tell you technically was that at this $6,500 range, $6,400 range, if you're looking at this previous spike in volume, there was going to be some what I consider institutional interest. Like whenever you look at this price action right here, that tells me that there's buy orders in this area. So I was really curious to see how far we would go when we get down here. I thought there was going to be a bounce, but I didn't think we was going to bounce all the way up to $7,100, $7,200. That I didn't expect. But based on this price action, I could tell there's going to be some orders there. So we did bounce, and the story kind of played out. But yeah, that's just kind of how it worked out over the weekend.
Wow. Definitely was a bit of a, grab your seats, strap in, and ride that thing up and down type of a weekend for you, man. Oh,
yeah, absolutely. Absolutely. I mean, with Bitcoin and crypto, because it is 24/7 trading, I mean, you could really, do really well over the weekends and catch some really major pips. But the technicals in this case, they just weren't that clear. And at one point in one of these messages, I just told you guys, I was like, guys, I'm stepping out of this thing. Like, I'm not sure if we're going higher. I'm not sure we're going lower. Like, I feel like we're supposed to be going lower right now, but we're still painting higher candle bars. So I just have to step out, take my whoopings for right now, lick my wounds, and then come back in when things are a little bit more sound. So
yeah, and that's an important piece to bring up. Regardless of what your strategy is in trading or investing or long-term hold, whatever it is. A lot of times the best thing to do is nothing, and it can also be the hardest thing to do. But I always say over and over that the number one rule to making money is to never lose money. And so, it's not worth the extra gain. The risk isn't worth the extra gain. And so sometimes, yeah, you just got to sit out and do nothing.
Mm-hmm. Yeah, wow. It was one of those days for sure. And as a result of that, numerically, like we ended up not participating in about 200 pips as far as price movement. But, that's okay. If that's what I have to give up to get clear confirmation, then that's fine. We're running profits right now that, made up for yesterday and put us in net profits for today. So all is still well.
Now, let's talk about, because it's not, I always want to say it's Touchdown Tuesday, but it's not. What's the term you use for Tuesday?
Turnaround Tuesday.
Yeah, Turnaround Tuesday. So, before we get into fundamentals, because honestly, there was a lot of great fundamental stuff this weekend that I know we're going to dive into. What's the verdict for Turnaround Tuesday? Are we going to hit 6,100 before we bounce? Are we going to recover? Tell me what the signals are telling you, or tell me what the seashells tell you, right?
Well, what I would like to see, what I think Bitcoin is doing right now. Hold on, I think I have it in our messenger too. Hold on one second.
You and Mark kind of lost me because you guys started talking about like gold and silver and stuff like that. I was just like, wow.
Oh yeah, we got to check the the forex markets. Forex is still my baby. No matter what goes on with crypto, forex is still my baby. Hold on one second. I think I sent it to you guys somewhere in here. Yeah, right here. So what it looks like what could be happening, and I even mentioned this before, like earlier on, I was like, man, it looks like we might be forming a head and shoulder. And this was like several days ago, but the way that the price action painted, I was like, man, maybe that's a stretch. I don't know if that's really a head and shoulder. Several days later, it looks as if we could be actually forming a head and shoulder pattern at the bottom. So if that is what is taking place, if we break below this neckline of this head and shoulders pattern, it's going to be a pretty major move. We're looking at maybe 6,400 up here, 7,400. Yeah, so that's going to take us down to 5,400. We're going to break. We're going to pull back up to touch the bottom of this structure. So we'll go down, come back up, touch the bottom of the structure, then we're going to drop about $1,000. So that's going to bring us to 6,400, like on the dollar. So getting out of here is the first objective. Waiting for the pullback will be a second objective, and then the drop. And by which UCAD, USD, Canadian dollar for all my Forex guys did the exact same thing today. I got in that short. It's beautiful short. Beautiful. And it's still valid. So if anybody's interested, I'm not telling you to trade it, but you should look at it. Like UCAD is paying out. UCAD is showing love right now.
Okay, so just so I understand in the general audience, because obviously, you know, we're starting to get really technical. So the head and shoulders is the fact that the middle guy is like taller than the two shoulders. And because they're similar, I see you've got labeled right shoulder, left shoulder. What you're saying is this is going to bounce, say at 6,100. And then depending on what happens on turnaround Tuesday, if it goes up, that's one thing. But if it goes down, it'll bounce, recover, and then really drop based on trends and everything. Is that a fair assessment?
Yeah, so ideally, what we want to see, because this $6,400 level is a pretty respected level. So what we will want to see is price to come through here with vengeance, let it come down, and then let the market recover just a little bit back to the bottom side of the $6,400, $6,300 range. That's what we want to see. And then let the market drop all the way again. So when it drops and starts to bounce, everybody's going to come back in the market. Oh, Bitcoin's recovering. This is the bottom. You're going to hear it all across the internet. We hit the bottom. It's going to recover. It's not going to clear. And it may be a little slippage. It may come up a little bit higher than it's supposed to, meaning breaking the neckline. This neckline is the bottom line right here. So it may break this neckline just a little bit with slippage, and that's really going to get people into the market. And then when the Asian session kicks in, it's going to drop at least $1,000. We're going to see most likely 5,400, 5,300, 5,200.
So if I'm still in my trade, right? So I've shorted 2 Bitcoins at 6,900. And right now my call or my cover point is 6,100. So if I were to, should I then maybe up my cover to 6,400 and then, set a sell again at 66 or 67 for the second drop?
What I would do, because I think you're trading it on GDAX or Coinbase or something.
Yeah. I'm on GDAX, yeah.
Let me see. Where's the market right now? So what I would do if I were you, I would wait for Bitcoin to drop down to about 6,500, and then I will put in a buy order at 6,800. That acts as a stop loss, and then I would let the market just drop all the way down. Because what's going to happen is it's very likely to hit that $6,100 range and then bounce back up. So then you'll feel like you've made some gains, and I can argue maybe you did. But then it's going to be very short-lived because once it touched the bottom part of that structure, it's going to drop again. So that's what I would do personally.
So my buy order, I keep it at 6,100 or should I raise it?
No. What I would do was I would take my buy order. Right now, leave it exactly the way that it is. It's fine. Okay, but then as soon as Bitcoin drops some more, I would take my buy order from 6,100 and I'll move it up to 6,800. That clears your floor. So then when the price drops down to 5,400, when it drops below 6,100, I'll move my buy order to 6,100 and then wait for the market to spike down. Because in reality, we could really see 5,000, sub 5,000 prices. But it's really up to you. I want to get in at the best price. So I want to follow my buy order with price, not put my buy order where I think price is going to be. So if you're guessing where the bottom is, I mean, maybe you're lucky, maybe you get the very bottom. But I'd rather follow price and maybe miss out on a little bit of opportunity than try to guess the bottom and it shoots through my buy order and I start off day one 10, 20% in the red.
Okay, so what you're saying then is I should raise my buy order level because price is telling me that 6,400 is a bounce or 6,500 is a bounce instead of 61?
Yeah, 6,400 is a good area to bounce, but it should be short-lived. But the point, the whole theory is, for me, is that I'm looking to follow price with my buy order, not put my buy order where I think price is going to end up.
Okay, so following the price. Well, just to clarify, following the price with your buy order means because right now I've got a short position to cover. Following price with the buy order means the price is telling me to move it to 6,400 or 6,500, or should I keep it at 61?
So basically, when I say follow price, it's the same thing as what traders we do with our stop losses. So so you're shorting Bitcoin at 6,900. Bitcoin drops down to 6,500. Now your buy order is at 67, just for example. Bitcoin drops from 65 to 63. Your buy order now is at 65. Bitcoin drops from 60.
Oh, you're saying my stop loss.
Exactly, because you can't do both. You can't do a stop loss and a buy order on Coinbase.
Well, I'm not technically shorting. You're right. I can do right now. All I have is a buy. All I have right now is a buy. Wait.
Right. They only allow you to take a buy order. So if you follow, all you want to do is move your buy order down with price, because there could be capitulation and it could shoot through $5,000, for instance. If I was to see like a big, heavy like dump in price, I could say, Charles, jump in right now. Like, just jump in right now. Put your buy order in.
So you're okay. So that's got me. Okay, now I get it. So what you're saying is, because when I think if I were to put a buy order, I thought I would just cover the buy order. But you're saying only you can set up a buy order where it goes. So as the price keeps dropping, I'm on top. So if there is a buy order, I'm locking my profit.
Exactly, right. Exactly. Because 6,100 for Bitcoin is a great price. I don't care what anybody says or what anybody feels Bitcoin is going to go to. But I think you can get even a better price. But I mean, that's up to you. Like, there's people that try to guess the bottom. Like, I know people that have buy orders at 5K. They have buy orders at 3K. And they don't care. They're like, this is my buy order. And I respect that.
Well, and as a long-term holder and investor, a lot of times on the coins I really want to own, I put standing buy orders in at 25% below what their current price is. Because a lot of times these exchanges have these flash crashes. You know, we have these wicks that drop really far or whatever. And so, so a lot of times I just have orders there at 25% less than the current price. And sometimes you get lucky and pick it up.
Yeah, that's true. That's true.
That's a good thing. Okay, wow. So that's great. So because I was basically trying to catch the bottom. You're telling me I need to follow the bot. Don't try to catch the bottom. Follow the bottom and just keep adjusting as the bottom drops.
It's a stop loss basically, because you're playing the downside. So now it's a stop loss in case it rises back up. You're going to catch it. You're locking in your profit. It's the same way. It's the same way if I was playing to the upside. As the price is moving up, I put my sale orders up. So that way, if it drops, I lock in my profit that way. But now you're playing at the opposite.
Exactly.
Okay. So instead of having what's called a limit buy, I do what's called a stop buy, and that's what covers that on that front.
Right.
Cool. Wow. I learned something today. Awesome stuff. Well, regardless of what happens on the bouncing side, I think I read some great long-term fundamental stuff. I'm still bullish, and I know Mark, you know, you had a lot to talk about on Friday. You want to kind of take it from there and continue in terms of what's on your mind and what we've seen?
Yeah, so you know the market is definitely exciting. You know, there's no shortage of excitement, and as we've just talking about, right? I mean, there's plenty of volatility, and as a trader, it doesn't matter what market you're in. And I know Yusuf talks a lot about like the Forex market, which is a heavily traded market, or even stocks or whatever. The thing you're looking for is volatility. You need movement one way or another, and so the crypto industry is or market is in no shortage of volatility. That's for sure. But you know that's one way you can approach the market, is you know on a more of an active kind of short-term basis. But you know the way that I typically approach the market is more from just like a long-term investment standpoint. And so I like to look for fundamental things. And so one thing we talked about last week on this call, and then on Friday I did another call where I kind of dug in actually way heavy on this. But what I was talking about last week and on Friday was that I believe where we're at in the market right now is similar to where we were at in the internet boom of 94, 95. And what that is we're in a bear market. Prices are dropping down. There's fear, there's uncertainty, there's doubt. and we're just kind of in a sideways movement, if not dropping down. But as bad as things appear to be, behind the scenes, things are actually really, really positive. And so what I mean by that is that although the prices are dropping, we've seen our market cap go from 800 billion to 300 billion and less. You know, people are scared, people are getting shaken out of the market. At the same time, we're seeing hundreds of millions, if not actually billions of dollars being invested into the industry in what I call infrastructure. So I actually, I put together this chart. I didn't think about it. Let me pull this up. I want to show this. Here it is. Let me show this chart real quick. So what's interesting is that here we go. So this is a technology adoption cycle. You guys see that?
Mm-hmm.
And so this is every new technology follows the same pattern. And so the automobile is a new industry, telephone or a new technology, telephones, new technology, computers, etc. And every new technology cycle has a faster adoption rate. So if you look at the telephone, it took about 30 years to get to 60% adoption. And it took about 75 years to get to like 80% adoption, which was like 50 million homes. And then we saw cell phones get to 80% adoption in about 15 years. So landline phones took 75 years, where cell phones only took 15. Part of the reason why it took telephones so long to reach adoption is because there was no infrastructure. There were no phone lines ran around the country. There was no, operator set up to switch calls. People didn't have, there wasn't good telephones for people to even buy and put in their homes. So the infrastructure had to be built up in order for that to happen. And so that's what I talk about. Now, what's interesting is if you look at the telephone took 75 years to get to 80% adoption, which was about 50 million homes. To put that into perspective, you guys have all probably heard about the game on the iPhone called Angry Birds. They reached 50 million people in 34 days. Wow. So each technology has this faster and faster adoption cycle. And so the internet, as you can see on this chart, took about 15 years to reach 70% adoption. And you can see how each technology cycle has a shorter and shorter adoption cycle. So I believe that although we can compare it to the internet boom, the tech stock boom, the crypto boom will happen much faster. And so my point is that in 94, 95, in the internet phase, we were in this bear market and we were seeing hundreds of millions of dollars being invested into infrastructure. So in the internet age, people didn't have computers. We didn't have ISPs, internet service providers. We didn't even have the hardware, the equipment to run the switches and the networks. We didn't have software like browsers to browse the internet or search engines to even search the internet. And so those things had to be built. So the internet technology was there, but it wasn't really usable until the infrastructure was built. And that's kind of where we're at right now. We have this blockchain technology, and there's a lot of money being spent to develop blockchain technology, and we can see what the blockchain technology can do, but we can't really use it. We don't have interoperability. We don't have cross-chain browsers. We don't have blockchain search engines. We don't have the hardware to really take that up. So that's what we're talking about. And we're seeing infrastructure being built today. So even though we're in this horrible bear market, we're seeing hundreds of millions and, like I said, even billions of dollars being spent on that. And so a couple of those things that I outlined last week, and there've been some updates, but one of them was one of the infrastructure plays. And imagine if I had like a city, I built this new city, but there was no roads or highways to get there. And then there was no electricity or plumbing for anyone to even be there. So even though I have this city, nobody can get there. Nobody wants to go there. And once you build those roads, now people can start coming. So we kind of have this blockchain industry, but there's no roads coming in. And so even though we have all these institutions that want to come in and want to get invested, we have the public that wants to come in. There's just no roads for them to do that. So one of the big things, and I mentioned it last week, was that the CBOE, Chicago Board of Options, asked formally in writing the SEC to allow a Bitcoin ETF. And I had said that I believe that's massive news, because a Bitcoin ETF will make it super easy for the public to get into Bitcoin. So right now, you guys all know, it's not that easy. I mean, you know, to set up an account and do your online verification and upload your documents and do all that and wire money, I mean, it's just not that easy. And if I have an ETF, literally everyone who has a trading account can just click a button and add Bitcoin. So I talked about that last week, but what happened just I think on Friday is news came out that that the SEC has actually been reviewing 2 Bitcoin ETFs since March 23rd, and they're from a company called ProShares. And ProShares is like the company. They basically run all the most ETFs that are out there. And really, if anybody was going to get an ETF approved, it would probably be ProShares. And so news came out that the SEC has actually been approving 2 Bitcoin ETFs from ProShares since the 23rd. So I think that's going to happen. And that's a road. That's a new highway that's going to bring all these retail investors into the market. We talked about South Korea, a $1 billion conglomerate in coordination with the Korean government to partner with OKCoin, which is the 3rd largest exchange in the world. And so what that does is that sets the exchange up in coordination with the government and these billion dollar conglomerates to bring institutional money in. So right now, they don't really have a good way to get into the market. But once you have like the 3rd largest exchange in the world partnered with the government in exchange, with these $1 billion corporations, now there's a new road, there's a new highway that allows these guys to come in. We talked about Goldman Sachs buying Poloniex for $400 million, which is a massive, massive purchase, $400 million. And the reason why they're doing that is they want that to be the first regulated exchange in the US to have securities. So it's a new road that's going to allow these institutional investors to now there's a road. It gives them a way to come into the market. We saw the same thing. South Korean investors, one of the largest markets in South Korea, bought Bitstamp exchange for another $400 million, another massive, massive infrastructure play. And again, this will allow institutions to get into the market through that exchange, that new regulated exchange. And these $400 million investments are not small. These are massive. And just there's no way these companies would be spending that kind of money if the success, if the future of this industry wasn't already guaranteed to be a success. So that's really big news.
Yeah, I mean, and then there was, what was it like? Was it the Rockefeller Fund or something, or another billionaires getting into the space?
Yeah, so I mean, more bullish news for sure. It's not necessarily what I would consider infrastructure in a sense, but it's definitely more positive fundamental news. But yeah, we saw a company called Venrock, and the Rockefeller family, who, if anybody doesn't know, should go back and study their history. But the Rockefeller family has been one of the richest families in the nation, maybe the world, for since the beginning of the country, of the U.S. And they've managed to keep their family wealth and only really grow it and expand it. And it's amazing what they've been able to do. But they have a venture capital arm of their kind of empire. And it's called Venrock. And so anyway, Venrock has been super successful in investing into only the best companies. And basically, they just partnered up with a crypto investment fund called Coin Fund to start to invest into cryptocurrency. So you have probably the smartest, richest, most well-connected group in the world, definitely the U.S., maybe the world, saying, okay, now we're going to start investing into crypto. And then they partnered with a crypto investment group just to do that. So that's really big news. It's really validating, just in a sense where it's like, we're not just like some crazy people that think this is going to be big. We now have the biggest, smartest, most connected people in the world getting in. And they said something in the press release that actually really stuck out to me, and I wanted to echo it. And they were asking them about Bitcoin's recent price failure, price volatility. And, it's in the 6,000-7,000 range. Yusuf was just talking about how it could potentially go up to 5,000. And they asked them specifically, how do you feel about Bitcoin's failure to stay above 7,000 right now? And what they said is that the price of a single currency over the next day, week, month, or year is not what they thought about when deciding to partner to get into the crypto investments. So they weren't really concerned with one coin's price of what it's going to do over the next day, week, month, or year. So they're looking at the technology, they're looking at the industry as a whole, which is how we approach it. They're not really concerned with what happens with one coin, what happens with Bitcoin. What they also said, that this is even more, even better, I like this better, is they said that, quote, we're really patient long-term investors. We're wondering what happens over the next 5 to 10 years. Can we have a fundamental change to a number of different markets because of distributed ledger? And so they're approaching the market from this long-term perspective. They said they can be patient. And so Warren Buffett is famously quoted, I quote him a bunch, and it says that markets are extremely efficient of moving money from impatient to the patient, right? So Warren Buffett says that, and the impatient are people who spend money that they invest money they shouldn't be investing, and then they really want to get that money back, and they need it back now. They're impatient, and now they have to sell at a loss to give it to the people who are patient that can hold on. And you can see how the smartest people approach this market. So Venrock says, quote, we're really patient long-term investors, right? So they're going to be patient. And so anyway, validating, right?
Well, so hey, I'd like to brainstorm with you on a concept or an idea, So obviously we're all aware of the news. Right now there's a little tiff going on between us and China, or not us and China, Trump and China. And it really made me think. I had a chance the other day to meet this guy. Not in person. We're actually going to hopefully sync up the next couple of weeks. But do you guys see my screen okay?
Yep.
This is a guy, his name is Chifi Nduom. And what's notable about him isn't the fact that, like he's saying African countries should buy Bitcoin. And, it is what it is. What he's saying isn't anything interesting. Well, it's interesting, but more of what his position is. And this guy, Chifi, is in the banking industry in Africa. He's part of a family that, they basically own Ghana and Liberia from a banking perspective. And he's saying we should seriously consider, instead of tethering to the US dollar, tethering to Bitcoin, between all these 13 African countries. And I think it's notable, not because it's like, you or me saying Bitcoin, but this is a guy like, his dad owns the bank, you know what I mean? And he's, an executive, I don't know his title, it's like VP or, like, this is a key banking executive. Now, obviously, he's definitely on the more liberal or pointy end of the stick. But when you have like someone in charge of a bank issuing or stating these opinions, that's definitely, something to be said, right? And it only makes me think, right now, we've got Trump and China doing their thing, and it is what it is. But the thing is, it's like you're kind of, poking an elephant, right? What happens if all these countries decide to say, you know what? U.S. dollar, we're just kind of fed up with it. We just don't want to deal with the U.S. dollar anymore. We want to look at something else, and they start shifting small amounts of dollars, or not dollars, small amounts of their wealth into another vehicle, and whether it's crypto or something else, that could be big. And Mark, I know you've talked about that a lot in terms of what would happen if all the foreign countries called their debts on the U.S. There could be some interesting things going on.
Yeah, I mean, there's definitely room for lots of interesting things. I mean, obviously, we could sit here and speculate all day. There's millions of things that could happen. Could they turn to Bitcoin? Would they use Bitcoin? Would they use a different coin? Are they going to launch their own coins? We have seen countries already moving away from the dollar. So that's already happening, but what are they going to be moving to is going to be the question. But yeah, things are going to be shaken up. That's for sure. You know, I mean, I don't know where that conversation leads us because it opens up all kinds of rabbit holes. But I mean, yeah, we have this trade war that's starting to happen for sure. And then over the weekend, now we have this war in Syria about to start picking back up again, which potentially could lead to a war with Russia and the rest of the Middle East and whatnot. So plenty of instability, which could lead to, you know, all kinds of havoc on the dollar. And no one's really clear exactly on what that does to Bitcoin or, you know, cryptocurrencies overall. And really, I think the best investors in the world don't really concern themselves so much with that stuff. We want to be like Venrock. We want to be like the Rockefellers that go, look, we're not really concerned about the next day, week, or month, or year. We see the tremendous potential, transformational power of this technology. We believe there's millions of opportunities inside that technology, and we're going to play that. So we're not trying to get caught up and focus on what's going to happen with Bitcoin because of the news.
No, I agree. And, you know, all I need is for them to say, okay, let's consider crypto or Bitcoin as another asset class along with gold and silver and, you know, real estate and all these other things that they buy. And then if, you know, 3% or 2% of institutional capital flows into this stuff.
Well, and I think we will, right? I mean, another big one that happened, and this one may even be bigger than the Rockefellers. And I don't know how many people know about George Soros. He's kind of behind the scenes, so he's not like famous like Warren Buffett, but he's probably he's way more influential on a global scale. He's one of the most successful and richest investors in the world. Like I said, nobody really knows him like Buffett, but he's way, way, way bigger. I mean, to some people, he's like the guy who like pulls all the strings, like including the U.S. presidency. Like Hillary Clinton was answering to George Soros. I mean, he's getting charged right now with meddling with Albanian politics. I mean, he runs all the governments of the world. Anyway, his family office. So when you're super rich, you have like a family office that is like your money that you invest. And so they came out, they had to file that they're now investing in cryptocurrencies. And so again, right, when you see people like Rockefeller, when you see people like Soros now starting to invest in cryptocurrencies, it's just super validating. What's interesting about that, he has about his fund that he had to register that they're going to now start investing in cryptocurrencies is a $26 billion asset management fund. And what's interesting is that earlier this year, he claimed that cryptocurrencies were a bubble, and he spoke to the World Economic Forum in January saying that currencies like Bitcoin couldn't be considered currency because of their volatility. But now he's getting in. And what's also interesting about that is the George Soros Investment Fund became the third largest shareholder in a company called Overstock. And you guys have probably heard me talk about Overstock before. It's one of the few publicly traded companies that's been really, really pro crypto. And he became the third largest shareholder at the end of last year. And at the same time, he's been dumping all his shares in Facebook and Google. So he's dumping shares of Facebook and Google, saying that they're threats to the monopoly of they're a threat of monopoly. So dumping Facebook and Google, buying in on Overstock, and now buying in on cryptocurrencies. So that's interesting. And one thing that's also really interesting about that is, I don't know if Yusuf is still on, but George Soros basically came out of nowhere. He made a name for himself by shorting. He's known as the man who broke the Bank of England. And so in 1969, basically he made so many bets against the British pound, he shorted the heck out of it, where he literally put the bank out. So he's known as the man who broke the Bank of England. He literally put the bank out of business by shorting the market. And so he is famous for basically putting governments out of business. So he comes in, meddles with the government, shorts the crap out of it, breaks it down, and then buys it all the way back up. So what's interesting about that is that's what he does. And so a lot of people are like, so is he going to come in and short the crap out of Bitcoin and cause that market to crash as well? But I don't know, how much more can it really be shorted? Did he already short it down and now he's going to buy it on the way back up? Like, how does his strategy play into where we're at right now? Now, he's saying that they're getting in now. The truth is he's probably been in for quite a while. But I don't know. What do you think about that, Yusuf?
I think that's deep, man. That's deep. I mean, you're sharing some things that I was unbeknownst to, and that's incredible capital, incredible purchasing power. Like that's it's one thing where you hear these type of figures, billions this and whatnot, but when you actually see the implications of how an individual can move the market, like, wow, that is amazing. That is amazing.
Yeah, so I look at like history and I look at people, and I like if you were going to play poker, right, you're trying to play the people, not the cards. And so it's like, okay, looking at Soros, looking at his track record, looking at his investment style, what is he famous for? He's famous for shorting and breaking banks and global governments. But then he buys into them at their bottom and profits all the way back up. So he shorts them. So he's like a corporate raider, right? He wrecks them and then rides them back up. But now he's getting into crypto. So is he going to try and break crypto and ride it back up? Or is crypto already busted down and now he's going to ride it back up? That's the question. And we don't have an answer. These are just things that we can speculate about. Right. A lot of people are thinking like maybe he got in at 20 and shorted it all the way down, but is he going to, how far is he going to short it down from here? Right? Like, how far can it go from here?
That's a great question. That's a really great question. That's a great.
I mean, if you're talking poker, I mean, if I was him, if I were to make an announcement, like once that announcement comes out that Soros is in, I mean, people are watching at this point, right? I mean, people are watching. I mean, and let's assume that, they're sophisticated and they're not just letting announcements out by accident. Like this is a leak as much as, all those Trump leaks, going into things were leaks, or, the whole Jay-Z Beyonce leaks.
Well, it's not really a leak though. So what happens is with these guys at the level they're at, they have to disclose this stuff.
Okay.
So it's not like a leak. They have to disclose it. So this information, it comes out. But what's the timeliness of it? So most likely they let us know way after it happened, right? So this just came out. So the likelihood is it probably started happening sooner. So then probably he got in sooner, shorted the crap of it all the way down. And now we're just finding out about it.
Yeah, because they have like a 60 or 90-day window or whatever, regulatory wise, or there's some legal rule, I'm sure.
Yeah, something like that. So, he became the third largest shareholder of Overstock, which is a very pro Bitcoin, pro crypto company. He's dumping Facebook and Google, and now coming into cryptos. So, and when he took position of Overstock, that was at the end of last year when Bitcoin was still going up to 20,000. Now, potentially he got in then, shorted it all the way down, and now he's coming in, I don't know.
Well, that also makes sense with Facebook and Google, because all this GDPR thing that's coming out is really going to hurt them pretty bad. I mean, geez, this guy's brilliant. I mean,
that's deep.
Well, these guys don't react to markets like we do. These guys make markets. So it's
exactly, they're market makers. Total different ball game.
Wow, that is pretty nice. Well, hey, I think it's about time to wrap up. But before we wrap up, I still need to put my trade in. So maybe let me share my screen. You guys can give me some advice on this trade this morning. So, do you guys see my GDAX? Okay.
Yep.
Cool. So I now have my, I didn't technically short it. I just kind of took it out of one pocket and the other. But I sold my 2 Bitcoin. So I've got, 13K, 14K sitting there. So now I want to cover it at this level. You would do a stop buy at say 6,850 or something like that, you said?
Right now we're at 6,700, so I wouldn't put it in because, you know, we could spike up. I highly doubt it. But the last thing I want you to do is get spiked up and get drugged back into the abyss with the price fall. So I wouldn't do anything right now. I'll wait for it to drop a little bit more, about another 100, 200 bucks, and then I'll put in your buy stop at 6,850.
Okay, so just kind of sit tight. Once it hits 6,500 or whatever like that, then just put it in.
Exactly.
Definitely. Good stuff.
Mm-hmm.
Yusuf, what about Ethereum?
Ethereum is having a really rough time. I mean, but as Bitcoin goes, as we all know, the rest of the crypto follows. Ethereum has been a little bit more liquid, though. Even with this last bounce, Ethereum bounced a little bit stronger and higher than Bitcoin. But I could see Ethereum, if Bitcoin goes to 5K, 3K, I mean, I know it might sound crazy, but Ethereum could be under 200 bucks. I mean, really easy. So
it seems like historically Ethereum has led the altcoins, right? So we talk about how the market's moving in unison and people wish that, Bitcoin and the rest of the market could move separate. So when you talk about the rest of the market, basically anything other than Bitcoin. And really, it seems like the Ethereum kind of leads the altcoins, and it seems like all the altcoins are like sitting on like bottom support, right? Like a lot of people feel really bullish about the altcoins right now because they've all basically hit bottom support. They're all kind of in this accumulation zone. Could Ethereum lead them out of that, regardless of what Bitcoin's doing, or no?
I'm really curious more so about Litecoin. I think when we come back out, I think people will be surprised. I think Litecoin might actually lead the alts.
Really? Wow.
Yeah, I mean, Litecoin, even within this decline, Litecoin has been the most bullish as far as resisting the bearish sentiment. So if we're just looking technically, I would be really interested in Litecoin. Just looking, not know anything about the projects, fundamentals, just looking technically. I mean, Litecoin really intrigues me a lot. So we'll see. We'll see.
Well, there is the problem, it's, if you think strategically, there's the problem where all these ICOs have Ethereum that they still need to dump and convert, into quote unquote cash to continue funding their projects. You've got the Bitcoin thing, but I guess Litecoin really isn't impacted by either of those. I never thought about that perspective. More thoughts, right? More ideas.
Yeah.
All right. Well, I think it's time to wrap up. Everyone who's been joining us for the hour, thanks a lot for tuning in. Until next week, the big day. We'll wait for Turnaround Tuesday to see what happens.
We'll see what happens.
Get the head and shoulders bounce. I've got my fingers crossed. Hopefully my stops will trigger and I'll make some extra Bitcoin this week. So I'm really excited about that. And yeah, we'll see everyone around. Talk to you guys soon.
Cool, guys. Thanks for having me. Appreciate it.
All right. Bye-bye.